Okay, our next speaker is Stephen Stewart, chairman of XXIX Metals. They're a copper developer advancing two large projects across Ontario and Quebec, including its recently updated Opemiska open pit resource, which is among the highest open pit copper resources in Canada at just above 1% copper equivalent. And they're taking both assets towards PEA. Thanks for joining us, Stephen. Good to see you, and I'll hand it over to you.
Good stuff. Well, look, thanks so much, Brandon, and the rest of the folks at SCP for inviting us to present XXIX. And it was very interesting to hear our new Australian friends come into the neighborhood with Cygnus. Followed that story very closely. We believe Chibougamau is going to be one of the hottest districts around with our asset as one of the anchors. Certainly, you've got interesting high grade going on over on the east side. And then, of course, you've got what I think is IAMGOLD's next major development down in the south with their monster and Nelligan. So it's a really great place to do business, obviously, in Quebec. Just transitioning into XXIX, again, as Brandon said, my name is Stephen Stewart. I am the chairman of XXIX. I founded the company in 2020. I'm no longer the CEO, and unfortunately, the CEO, Guy Labelle, can't be here today. He's up on site on our Thierry, our Ontario project, which we just acquired in December. I'll tell you about that shortly. He sends his regards and apologies, and you're going to have to put up with me. But I know this. I was CEO for 5 years, so I know it very well. We renamed ourselves when we acquired the Thierry asset in December as XXIX, which, of course, stands for 29, which is the atomic number for copper. And boy, do we have a lot of copper in our company. And I'll just start off by telling you about two of our assets, our flagship assets, and we own 100% of both of them. And our Opemiska, which is in the Chibougamau camp, is, as I said, I think it's the anchor asset in Chibougamau. It's 150 million tons at 0.7% copper in a pit. It's the highest grade open pit deposit in Canada. It's a former Falconbridge operation which shut down in the 90s, produced billions of pounds of copper, millions of ounces of gold, and we have reinterpreted it into an open pit, reminiscent of what the good folks at Osisko did a decade or so ago. The same thing is happening in Chibougamau Chapais with our Opemiska. I'm going to run you through it. It's very compelling, and as a result of being a top-tier mine back in its day, it has all of the legacy infrastructure, which is absolutely critical for base metal projects, including rail, road, power, and a community that is very familiar with mining and wants this new project to be moved forward, of course. I would be remiss not to say that the Thierry is equally interesting. It's not as well developed or as defined, but it's going to get there, and it's going to get there quickly. And it benefits from all the same sorts of wonderful infrastructure that the Opemiska has, except it's in Ontario. I think two of the best districts around. Thierry's in Pickle Lake, which is very mature gold camp, primarily gold camp, but you've got this copper, nickel, PGE magmatic deposit right in the middle of all of these gold deposits, which I guess, again, to connect small world, Firefly still owns the Pickle Crow right to our next door. And of course, Orla acquired the Musselwhite just to our north. So Thierry is in its own right a very well established resource. It's the largest copper resource in Ontario. Again, all this wonderful infrastructure. And again, we own both these things outright in a relatively small company, very small company, worth $30 million. So you get the highest grade open pit deposit, copper deposit in Canada, and the largest copper resource in Ontario, owned 100%. Ontario has no royalties, all on the infrastructure for the very low temporary market cap of $30 million. And we've got about $5 million cash and a position in a new company, which is part of the org group, which there'll be an announcement out today. In fact, base load is one of our core positions. We own an equity position. It's got a material announcement coming out today, so you can keep your eye on that, but I won't get distracted. Just going back here, just note we have a PEA. That's the next milestone. We just updated Opemiska's resource a couple weeks ago. very material. I'll run you through it, but we'll move fast to a PEA to define the economics and the engineering on this project. We think it's going to be robust. Just highlighting here just quickly that the Opemiska is in fact head and shoulders above the rest of the copper open pits in Canada. You can see all the big boys there, and it's very high grade. And that's just the copper. We have a very nice gold credit at Opemiska. It's going to be very material, takes the grade well above what you see there. That's copper alone. And then Cherry's not too far behind it. And then, of course, here's Cherry. This is more specific, more granular. This is Ontario copper primary deposits. And Cherry's head and shoulders above some other fairly well-known big companies there. Again, we're just not getting the respect we deserve. Cherry is totally off the radar. We acquired it in a very unique transaction, but it's towards the end of this year, we're going to have a update on it. It's just begging for drilling, but we know a lot about it because it's a brownfields environment with lots of data, and we love data. Opemiska, we had 1 million meters of drilling from Falconbridge, whereas in Cherry we had a 250,000 meters of drilling. It's just so fundamental to us. Going back to Opemiska and the infrastructure here, you can see there are 4 shafts, Springer Perry, on the west side of the project. That's where all of the mineralization disclosed to date is. You can see the little open pits, not so little, it's quite large, but we've got the rail, the road, airport there. You can be there in a day, easy. We've got the Chapais-Chibougamau, which, as Cygnus said, are very commercial, great relationships. They're Cree, very supportive. And of course, Chibougamau is not too far away, and as is the town of Chapais, that's close by. So look, this project has all the wonderful benefits of infrastructure, which are absolutely critical for base metal projects. Now, this is the meat on the bones. Game changer, as we call it here, is this resource that was just published 2 weeks ago, and really the market just shrugged it off, which I think that's going to change. You can see we've got an indicated resource of 70 million tons and an inferred at 80 million tons. Just putting that all together in pit, we're about 150 million tons. That's very large at 0.7% copper equivalent. The resource that changed, we published a resource in 2024. This has changed quite materially, and I'm going to show you why. But I think the key takeaway here is you can see there's a single pit there. It looks like 2, but it's connected. We're going to define everything, including the economics and mine plan. Probably towards the end of September, early October, we expect to have our PEA out. But this is a high grade. We think it's going to be high margin project right in the heart of Quebec. This is really the material aspect, the difference between our 2024 resource and 2025. On the left-hand side, you can see how the resource model was interpreted. It was, and what you see in the red there or pink is the high-grade veins that we're mined by Falconbridge. A lot of that material is still there, which is important. On the right-hand side, you can see very clearly what we call the stockwork zones, which surround these high-grade veins. It was completely left over from the mine in Falconbridge. It was too low grade for 50, 60 cent copper in the context of an underground mine. They knew about it, but it's still there, and comes right to surface, and it makes the model much more robust, and it's going to drop the strip ratio down substantially. Whereas on the left in 2024, the strip ratio, there's quite a bit of waste there, but now we've converted that into resource at good grades, has a material impact. We think the strip currently is about 4-to-1. We think in the PEA it's going to come down even more. This is the slide here again, just comparing and contrasting 2024's resource versus today's. It's quite a bit smaller. The headline really in my mind is we've added 250 million pounds of copper equivalent into this resource. So 250 million pounds more than we had in 2024 in a materially smaller pit. So we're moving less rock and we're getting more copper. That will be reflected in our economics. I'll leave it there. I think just look how much smaller that pit is, and we got 250 million pounds more copper. So that's material. And then after the PEA, I think the PEA will be robust. It'll be taken note of and will answer a lot of questions. And then we move rubber to the road. To me, it's all about the pre-feasibility. Those are the real reports. That's where the detailed engineering comes in, and we've got a clear plan to move it forward. It'll take, a minimum 18 months. Don't want to get too ahead of ourselves in planning, but we have our eye on the prize. It's all about feasibility, de-risking this project, showing its economics, and showing that this is going to be a mine again. It was a major mine. We think it's going to be a very significant mine going forward. So that's the story of the Opemiska. I'm going to shift gears to our second 100% asset called the Thierry. And we say it's a big surprise. It was really operated throughout the 70s, shut down when copper price and the economy just wasn't there. And then it was domiciled in undercapitalized juniors ever since. And we took it, we acquired it, did so in a very creative way. And completely tore down the data. As I said earlier, there's 250,000 meters of historic drilling, which we stripped down to source data and built back up our own model. We're very good at remodeling and reinterpretation. We have a very deep team of geologists, and we've learned a lot. We did this exact same process at the Opemiska with its million meters. So we learned a thing or two. We love brownfields environments, especially ones with wonderful infrastructure like you see here. Pickle Lakes right there, airport, the rail. Both of these projects, both Thierry and Opemiska, sent their concentrates to the Horne Smelter in Quebec. So there's a lot of similarities here. Just to define what the mineral resource, so the mineral inventory on Thierry, and the area of focus for us for now is the K2 and the K1. K2 is on the west. You can see that's 25 million tons, which is a substantial resource at 1.4% copper. 1.6% copper with additional nickel and PGE credits, which if we were to use EQs here, equivalents, we'd be well over 2% copper. We don't because we have some work to do on the metallurgy, but it's a very high grade deposit and that's where the production on this mine came from. But not to be ignored, certainly not in the context of open pit mining, which we love to do. Especially on the infrastructure, is the K1 zone. It is about 3 kilometers to the east, and it's large and going to get significantly bigger. And that's where the upside is here, aside from unlocking the geology and really blowing this thing open. But locally on the K2 and the K1, there's going to be significant room for growth. It's about 55 million tons at just about 0.4% copper with additional nickel PGE credits. And we think this is going to be the game changer. We have a totally new interpretation. Again, we've stripped it down. And this is sort of what it looks like, our model. We're still working on it. But this is the K1. This is the lower grade, but quite large. It's 1.4 kilometers in strike. It goes down. We've only really drilled it to about 400 meters, but it's wide open. Along strike and at depth. We even think there's a parallel zone there. So this is just begging for drilling. Truth be told, we think this is, it's quoted in a 43-101 at 53 million tons, but we think this, without drilling a hole, it's orders of magnitude larger because of our interpretation. And in the next slide, I'll show you that. But before I do, we poked about 5 or 6 holes in this thing in 2024, and that's really the only recent drilling has been done. And the good news is it gets higher grade at depth. You can see that one of the holes was nearly 200 meters at over 0.5% copper with some healthy nickel, silver, and other goody grades there. So, and I think the takeaway here is when you the model is what we call the canoe model, and which means when the the metals settle, they settle to the bottom. And we think if the deeper we drill on the K1, the higher the grades. Obviously, we want to find the 1.6% copper grades like exists over in the K2. We want to find more of that. But even this low-grade bulk tonnage in combination, both resource, it becomes very significant. So I said, just shifting back here, look, this is the new interpretation, the 53 million tons on K1. What you see in the darker shade is the resource, the historic resource, or it's 43-101, but we have a completely new interpretation, which is similar to what we did at the stockworks on Opemiska. The zones, the in between, they carry. When we went up there and took inventory of the core, they did not sample in between those darker veins, and so we sent it off to the lab, and lo and behold, it carries. And we're going to be mining this anyway, so it's all it was counted as waste, but in fact we view it as ore. It's very large, and I said orders of magnitude larger. And the other bonus is the dip on this is about 50 to 55 degrees, and any mining engineer will tell you that's very favorable for the strip ratio, which I won't quote, but is going to be very low by the time we're done with Cherry. So Cherry is the big surprise. It's going to get bigger without even drilling a hole, but it's just also just dying for drillers drilling, and we're going to have a very robust drill program towards the later half of this year. So stay tuned on that. Aside from the local zones at K1 and K2, it's just in between those two zones. It's the same. Those are the same events, same structure, same mineralization. There's definitely upside, call it new discovery potential between them. The geophysics certainly support that, but there's only one way to test it. And when we have a systematic property-wide drill program, which this property hasn't seen for decades, literally, we may have some additional surprises in terms of discovery. Just like the Opemiska, it's all about the pre-feasibility. That's where our focus is. We have the eye on the long-term prize. That's where the real value is. We've got a plan. We've costed it out. Obviously, it takes time, and we don't want to get too far ahead of us. Cherry is about a year or two behind the Opemiska in terms of its definition and reports, et cetera, but can get caught up quickly. And we think it will. As this market, we seem to be on the cusp of a turnaround in terms of the mining and the metal sector being popular and proper capital being allocated to our industry, so we can develop these really great assets right in Canada with all this access to infrastructure. So as I wrap up, here's the corporate overview. We're traded on the Toronto Venture Exchange under the symbol XXIX, which of course is 29. We're about 30 million bucks. We got cash. We got a material position at a company called Baseload, which, again, speaking my book as chairman of Baseload as well, has a material announcement out today. It may be out, but it's coming out any minute now. That's a nice position for XXIX to have. We are a part of the OR group. We have a track record of raising lots of capital, doing strategic deals with companies like Newmont, South 32, recent deal with Fortuna, Agnico Eagle, and others. We're a dedicated, focused team based here in Toronto and across Canada with exploration assets where we focus in Canada. We love these types of projects that have infrastructure. These are the key people for XXIX. Again, Guy Labelle is the CEO and the boss of the company. He's Quadra, ex-Capstone, mining engineer, the guy who's working on this full time to take it to the next level. These are the forward-looking statements all the way at the end. And here's Guy's contacts, or feel free to reach out to me anytime as well. So look, thank you for your time, and I'm happy to answer any questions anybody has.
Excellent. Thanks, Stephen. Great work on refining the MRE at Opemiska to underpin the PEA later this year. First question is just simply, how many meters are you planning to drill across both projects, whether it's infill or discovery focused?
So first on Opemiska, what I didn't touch upon is outside of the existing resource that came out on those Springer and Perry, we have, there was two other shafts or mines actually. One is called the CuEq. And the CuEq is an outlier because it's actually a gold mine right there. It's 2 kilometers from the open pit, and we have not drilled it yet. But we have modeled it just like we like to do. We've modeled it. We believe we found a parallel zone. We're going to be drilling on the CuEq on the fall and put a resource on it. Probably start with about 10,000 meters on the CuEq, starting again in the fall. And that's all the drilling we'll see on Quebec for now. And then again, its focus will be on the PEA, which is well underway. Over to our Thierry project, we have not designed a drill program yet. We have a pretty good idea, but I think this wide open for drilling. I mean, given I'm not the geo, so I'm not going to make the final decision. But what I want to do is throw a lot of meters at this, both locally at the K1, which is as I said, wide open at strike, at depth, and the K2 as well. And then we want to test some targets in between. So look, I wouldn't be underselling it if I said we wanted to throw 20,000 meters at this. Not all of those 20,000 meters are fully designed, but not a single meter would be wasted.
Excellent, understood. Next question. This actually ties in with some of the peer commentary around the government funding. So the question is, how does XXIX qualify for potential government grants with relations to critical mineral funding?
So it's there. I mean, I would say the most impactful government funding, and wouldn't even call it government funding, which I'm a little skeptical of. But let's call about tax incentives vis-a-vis flow through. Obviously, these are critical metal projects, and if you do charity flow through, you get, which we love, and I know you guys at SCP love it too, because you get wonderful shareholders and a wonderful premium, and an even better premium if you are in the critical metal space, which both of our projects do. I mean, charities, you get upwards of 50% premiums, plus in Quebec, once you put that money into the ground, you get a rebate back the following year. So it's really a generous regime. I think it should be even more generous. So look, they are rebates, as opposed to, we don't focus too much on handouts. Not that we're adverse to handouts. I just think handouts often come with strings. We try and focus on the capital markets and tax benefits, if that answers your question, Brandon.
Yes, thank you. This last question comes from the screen. How is the company's focus and relationships with local communities and focus on the environment in terms of permitting and baseline studies evolving?
So there's not a square inch of this country where you can operate without dedicating an awful lot of resources towards community relations, and that includes just sort of municipalities, townships, and of course First Nations. Starting off with our efforts in Quebec, everybody knows we're close to the town of Chapais, which the town of Chapais is a wonderful mining town. It was born out of the Opemiska mine back in the 40s and 50s. The town is still there. It's very supportive of it. It's a beautiful community. Guy Lebel is there 1 week a month, every month, establishing the relationships. We've announced a partnership with the town who want this. This is an economic development. There's not a whole lot of economic development opportunities in the north. So this is how the town is going to reinvigorate itself and the local community at large in Chibougamau. So we invest an awful lot of time, effort, and energy with that municipality, with its leadership who have been supportive, and of course with the Chapais-Chibougamau and the West Wanape, who are the local First Nations communities. And then over in Ontario, equally the same thing. The town of Pickle Lake, it's a mining town, so we're not doing anything that they're not unfamiliar with. And the same with the First Nations there. They're the Mishkogogame, very commercial group, very well versed in mining and exploration. They have exploration agreements with all sorts of, Orla, for example. I mean, that's a huge source of revenue for them. So everybody's been supportive. It's something that you need to pay very close attention to always. You can never rest on your laurels. We focus on transparency, communication, economic opportunity directly on the project, and broader. I mean, really, we have to go in there and explain to everybody the long-term vision behind building a mine and how that can really totally develop your community. And of course, it would be remiss if I didn't say we do it responsibly, but everybody does it responsibly these days. You simply cannot do business without doing all the things I'm talking about and doing good business. It's just not possible. And I think we do a very good job at it, at the OR group as a whole.
Well said. Okay. That concludes this portion here, Stephen. Thank you very much for presenting to us. Really appreciate taking the time.
My pleasure, Brandon. Thanks again to you and all the folks at SCP.